Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, I'm going to try a little bit of a different format, and we are going to dive right in looking at today's company, which is S&P Global Inc., ticker symbol SPGI. Most of you are likely aware of this company as they host the S&P 500, and it is an intrinsic part of trading and the markets in general all around the world. It is considered a credit rating agency, and they provide credit ratings and other company analytics for investors all around the world. And here we have S&P Global on the annual chart, and you can see that just a few days ago they had earnings, and it was an earnings miss, and the share price has pulled back significantly from where it was at about 427 or so, all the way down to where it is now at 392. That's quite a drop in a very short period of time. And this is a high quality company. So anytime you get to purchase it at a discount like this, it's a good idea to take it. And you'll also notice, if you look at this uptrend, the one we had most recently since March, it tends to bounce up and down within a pretty tight range. And this current fall we're in here is definitely outside that range. It pulled back. It was following the 20-day moving average. I guess you could say this might follow the 30-day moving average closer, but the 50-day moving average is where the share price stopped. So we'll see if there is resistance at that point, or if it keeps going lower. We look at these other metrics, I suspect that the share price will continue to drop a bit. The RSI has not quite reached oversold territory yet, although it is falling quite rapidly. Both stochastics are also dropping extremely rapidly, pulling into the oversold zones. The volume chart, you can see the giant spike in selling volume and then slightly decreased selling volume, but that is, of course, relative. The decrease still puts it well above average volume. I suspect we're going to see another day or two, at least, of selling volume before this stabilizes. And the MACD is plummeting below zero. And again, I suspect we haven't seen the bottom of this particular trough yet. So this is an excellent company, and the current problems that they're experiencing, I fully suspect, are going to be temporary. I would say this should be on your radar for a few days, and when you feel like it's reached a bottom, that would be your entry point. If we switch over to E-Trade, we'll take a brief look at the company fundamental statistics from a very broad 10,000-foot range. You'll see there's very low short interest here. The debt to equity ratio indicates it is low. It's low debt, even compared to its peers. It is less than 66% of other companies in the same industry. You'll see these numbers here are just low in general. Debt to equity at 0.32 is not much at all. The PE ratio is high. This company is well known, and it commands a high price, and is in fact higher than 85% of other companies in the industry. I'd like to see that lower, of course. PE at the moment is 54.26. That's certainly not the highest PE I've seen, but again, I'd like to buy it lower than that. We'll have to wait and see what happens. Now, the profitability is excellent. The gross margin is greater than 78% of other companies in the same industry at 65.83%. The operating margin is even better than that. It's just over 30%. And that puts it above 95% of its peers in the industry. So this is a very profitable company. Return on equity also shows it is better than average at beating out 68% of its competitors. Although if you take a look, the return here these are all small numbers, single digits. Return on equity is 6.27%. So if we compare that to the high profitability numbers, this tells me that the margins in this industry are very slim. Moving on to the growth rate is less than 66% of its peers. And I'm not surprised by that. S&P Global is one of a very, very few companies in the world that do what it does, or that even can do what it does. So the competition here is tight. There's only a few of them, and therefore they don't expand at the rate of other companies. And for those looking for a dividend, the dividend is not that great at 0.91%, although the payout ratio is less than 50%, which makes that dividend yield quite secure. So all things considered here, I think we watch S&P Global for another couple of days, hoping for a pullback a bit further. If it can get down below 380, that would be outstanding. And then make your purchase there. And I do believe that this is a short-term issue for the company, and that earnings will improve and the share price will correspondingly swing back higher. So please let me know your thoughts on S&P Global in the comment section below. As always, I need to remind you that everything I discuss here is not financial advice. I'm not a financial advisor. I create these videos for informational, educational, and entertainment purposes. So please, if you plan to invest, do your own due diligence or consult with a financial advisor. And if you got something out of the video, I'd really appreciate it if you hit the like button and subscribe to help out the channel. And if you have any comments, they certainly help out. So please leave those below. And if you'd like me to take a look at a particular company using these indicators, please mention those in the comments and I'll get to them as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.